in the next few minutes. And we also request you to place your phones on a silent mode. Thank you. All of our delegates who are still joining us, we are going to request you to please take a seat very quickly so that we can begin as soon as everyone has settled down. And just once again, we'd like to remind you to place your phones on a silent mode, please. And a very warm welcome to the Sa-Dhan National Conference 2017. Ladies and gentlemen, the theme of this year's National Conference on Financial Inclusion is Reinventing Inclusive Finance in the Digital Era. The conference will feature a series of panel discussions on pertinent themes related to digital and inclusive finance. And throughout today's program, we intend to bring together key stakeholders from the banking and financial services sector and the policy regulatory ecosystem to deliberate on the nature and extent of financial inclusion prevalent in India even today and the role of the ecosystem in creating an efficient and inclusive financial system for all in the near future. We welcome you all once again to our today's program, and we'd like to now start our program first with the inaugural session. I'm going to request all of you to please put your hands together and join me in welcoming on stage Shri Harsh Kumar Bhanwala, the chairman of NABARD, who is our key speaker today, and we welcome him. A very special guest on our today's program, requesting Mr. Harsh Kumar Bhanwala to join us on the stage. Along with him, we also have a very special guest, ladies and gentlemen, Mr. Manoj Mittal, the DMD at SIDBI. He is also here with us, and I'm going to request Mr. Mittal to also join us on the stage, and request you to also put your hands together and join me in welcoming Ms. Jayashree Vyas, the Managing Director of Seva Bank. She is also the chairperson of Sa-Dhan. I'm going to request Ms. Vyas to also come up on the stage. And last but not the least, Mr. P. Satish, the Executive Director of Sa-Dhan, is also on this panel on in the inaugural session. I'm going to request Mr. Satish to also come up on the stage now. Well, as we start our program, before I invite for a welcome speech the chair of Sa-Dhan, Ms. Jayashree Vyas, just to tell you a little about her, ladies and gentlemen, Ms. Vyas is a professionally qualified chartered accountant and has been working as the managing director of Shri Mahila Seva Sehakari Bank, Ahmedabad, since 1986. And this bank has more than 5 lakh women clients. During her tenure, she has taken active steps in introducing and operating an integrated micro-insurance scheme for women working in the informal sector. The scheme was introduced for the first time in the country, and in a short period of 3 years covered more than 150,000 women. She has also devised and implemented various housing finance schemes, and which have been accessed by over 20,000 poor women. She has introduced, organized, and managed saving groups of poor women in more than 5,000 villages in 9 districts of Gujarat. And the scheme has helped more than 150,000 women start saving for the first time in their lives and availed credit facilities for coming out of the vicious circle of poverty. In addition, she has also prepared modules and manuals for providing training for running effective saving and credit programs for various national voluntary organizations involved in similar activity. I'm going to welcome Ms. Jayashree Vyas once again and request her to now kindly give the welcome address. Please put your hands together and welcome her once again.
Good morning. Respected Shri Harsh Bhanwala ji, Chairman of NABARD, respected Shri Manoj Mittalbhai, DMD of SIDBI. Satish ji, I'm not seeing here, maybe he will come here. So respected Satish ji, and all friends. It's a great pleasure to welcome you on behalf of Sa-Dhan in this National Conference 2017, Reinventing Inclusive Finance in the Digital Era. It's always nice and a pleasure to meet all our microfinance colleagues here. Always, this is one, I think, incentive which we always have to meet all our colleagues, our banker friends and supporters, of comparatively new friends and colleagues of IT sector, press representatives, and of course, our great supporters and mentors, and their representatives, SIDBI, NABARD, RBI, and of course, Government of India. The Indian microfinance sector is growing continuously, in spite of lots of constraints coming. The latest one, of course, was demonetization, but somehow or other, we have been able to meet with this kinds of crisis. It's because of, I think, our intentions, and maybe because we're working together, and support of all government and developmental banks. In terms of outreach, numbers of MFIs have increased. I mean, that you will see from Satish ji's numbers, you will see from Satish ji's presentation, but I'm just saying that it has definitely increased. Volume of business also has increased. Range of products, I'm talking about 3 decades, but of course range of the products also have changed and improved, like from credit to pensions and also financial literacy. Types of institutions also have, it's not that, one has transferred to other, but there are different types of microfinance organizations like SHGs, SHC federations, and small bank. I mean, it leads up to small banks and universal bank also, maybe one. So it is growing in all different types of areas. Use of technology is new, but, of course, we have been working on it. Networks of MFIs and rating organization. So we are also working on code of conduct and SRO. It's not that we are just changing and increasing the number of microfinance organizations, but we are also trying to improve our efficiency, and also now SRO means kind of regulations amongst ourselves also. So according to recent Sa-Dhan's report, the Bharat Microfinance Report 2017, this whole report you will be, I think, making a presentation of it, but what I'm giving the numbers are that, all MFIs operate in 33 states and union territories and cover 563 districts of the country. But still, it is much less as compared to what we are required to do. And this is something I think we have to learn also, and we have to understand the needs of our people we are understanding, but we still have to understand it. We have to reflect and, of course, improve continuously. Are tools for doing this, one of the tools, I would say, for doing this. And that is the reason why, this kind of conference is also held, where we are trying to understand or reinvent inclusive finance in the digital era. So this is something which I always feel, maybe it is too much I'm saying, is that working microfinance sector, working with so many people and working in the informal sector, and its objective is to help them to increase their income, productivity, efficiency, and of course providing different types of financial products, including saving and investment. It might help, and it will, and it can help the country to improve, maybe GDP of the country. That is the potential which we have as a sector. And so we have to work together, and if we keep on improving on what we have been doing, there is definitely a possibility of, we helping not only the poor people, but helping the country and helping ourselves also. So these are our some maybe experiences and some of the initiatives which we are taking on behalf of Sa-Dhan to come together, to learn together, and maybe eventually to improve whatever work we have been doing and deal with the constraints which we have been coming. So I again welcome you all, and just enjoy all the, you must have got all the entire sessions and all these details of sessions. Each session is very interesting, so please enjoy, and let us be together next 2 years, and all the best to everybody.
Well, thank you very much, Ms. Vyas. And now, ladies and gentlemen, I'm going to invite Mr. P. Satish, the Executive Director of Sa-Dhan, to present and release the Industry Analysis Bharat Microfinance Report. And just to tell you a little more about Mr. Satish, ladies and gentlemen, he took over as the ED of Sa-Dhan on 26th of March 2015. Earlier, he has served as the Chief General Manager heading the Micro Credit Innovations Department of the National Bank for Agriculture and Rural Development, that is NABARD. And he has also, prior to that, headed its Maharashtra regional office in Pune, and also headed the finance department of NABARD at its head office. And we welcome Mr. P. Satish here, and I'm now going to invite him to present and release the industry analysis, that is the Bharat Microfinance Report. Please welcome him with a round of applause, ladies and gentlemen. Ladies and gentlemen, the dignitaries are now releasing the Bharat Microfinance Report. And I'm now going to request him to kindly come and talk to us about this report.
Good morning. Welcome to the annual national conference of Sa-Dhan. I particularly welcome Dr. Banwala, Mr. Manoj Mittal, and Chair Sa-Dhan, Ms. Jayashree Vyas, and all other guests and delegates. I always, in our Sa-Dhan conferences, always mention a fact that the Indian microfinance sector is at the present state where it is because of two public institutions, that is NABARD and SIDBI. So had the contribution of these two major institutions had not been there, probably I very much doubt whether the microfinance sector, either on the SHG side or the MFI side, would have grown to this level in our country. So I think first, if you are celebrating microfinance, I think we should give a big hand to both NABARD and SIDBI for their contribution to the sector. And Sa-Dhan is doubly blessed because we always have the complete support of both these institutions, and incidentally, both these institutions are on the board of Sa-Dhan also. So that's why the two eyes of the Indian microfinance sector, they are also represented here in our inaugural session. So I welcome both SIDBI and NABARD for this inaugural session. So I'll give a brief snapshot of what the Bharat Microfinance Report contains. With regard to the spread and workforce, we can see that almost it's spreading to almost the entire country. And one thing which we noticed in this year's BMR is that MFIs have started operations even in a remote place like Andaman and Nicobar Islands. And they're covering reaching 600 districts. Of course, we can't keep up because states are always creating new districts. So it's a big race for the sector to reach the 630 or 650 districts now. 4 MFIs, leading MFIs, operate in more than 15 states. But we see there are a large number of small institutions which operate in one state, and many of them operate in 2-3 districts. So 90 MFIs have confined their operations to only one state. And we also have medium-level operations which work in 2 to 5 states and more than 5 states. And workforce, if you exclude the 6 small finance banks which have already started operation. Nearly 90,000 is the workforce in the MFI sector, a growth of 23% compared to last year. And as is a sector which works at the field level, 60% of the total staff is field staff. And the one fact is that though this sector is contributing in a major way, and 96% of the clientele are women, the staff, on the staff side, I think it's slightly less. Female staff comprise only 12% of the total workforce of MFIs. When you look at operational landscape, reached to 30 million, actually it is 29.67, something like that. Number-wise, decline if you take the figures year on year of the Bharat Microfinance report, but if you separate the SFB's data, there is a growth of 10% in terms of outreach. The sector actually caters to the weaker and deprived sections of the society. 30% of the total clientele belongs to SC, ST and minority communities. With regard to gross loan portfolio, this is in the context of the entire environment which has happened in the later part of the last financial year, which was quite an uphill task for the entire sector. So despite that, again, if we separate out the SFB's portfolio, the sector has seen a growth of 18%. Though this growth compared to the previous year's average growth of roughly around 35 to 36% over the last 3-4 years, the 18% is less, but if you keep in mind the developments in the entire environment, socio-political and economic environment, this 18% growth is reasonably creditable for the sector, which includes, of course, the BC portfolio and the managed portfolio. Again, loan disbursement also, strictly, if you analyze year on year, there is a decrease. But again, for the exclusive MFIs, excluding the small finance banks, is a 15% growth. One feature is that, again, before 2014-15, the majority of the clientele was rural clientele. Now, if you separate out the SFBs, because the data of BMR is only for the MFIs, the rural clientele has again increased. It means that the medium size and the smaller size MFIs have their concentration on the semi-urban and the rural areas. And the bigger MFIs which have progressed into small finance banks, their concentration had been mainly on the urban microfinance sector. Average loan per borrower, despite so much of churning in the sector, has actually marginally increased from 11,500 last year to nearly 13,000 this 2016-17. These are some statistics with regard to the financial performance. Income has, if you look at the sector as a whole, only for the MFIs, has reduced to 9,000 crores. This is again keeping aside, because the SFBs are not there in this BMR data this time. And naturally, the income on loan portfolio comprises 71% of the total income. And total net surplus after tax generated by the sector is 1,286 crores. It's a nominal amount for such a large sector. It means that the sector is almost performing on working on a reasonable profit basis, not on a huge surpluses. The median average borrower per credit officer, that stood at 426. That means greater attention to the credit dispensation at the grassroots level by the institutions. Operating cost has marginally increased. Median finance cost also has increased during this year. And all the institutions which have contributed data to this BMR, their margin, yield and capital adequacy are as per the RBI norms. No institution has violated any of the Reserve Bank norms on this. Median return on asset and return on equity have moderately increased compared to last year. And all the microfinance institutions which have contributed data to this report, we're proud to say that every institution has a positive operational self-sufficiency. Asset base is 46,000 crores. Growth is 38% excluding the small finance banks. Then, of course, naturally, loan portfolio and cash equivalent comprise nearly more than 93%. This is the figure of net own funds, and again, equity is a part. And MFIs collectively raised fresh equity of nearly 2,000 crores, and total funding has been reported at around 34,000 crores during the year 2016-17. Out of that, 77% is borrowing. And as I mentioned, microfinance in India comprises not only the MFI sector, but also the SHG bank linkage program. BMR also has a chapter on SHG bank linkage program, and naturally the data for that is sourced from NABARD. So as per that, the SHGs are touching nearly more than 110 million families or households. The trend is positive with regard to SHGs linked to banks. Nearly 86 lakh SHGs are savings linked, and the savings amount has also increased, though the rates are slightly marginal, around 16,000 odd crores, and average savings have also increased. And as on 31st March, nearly 50 lakh SHGs have a loan outstanding, which has crossed 60,000 crores. And the total amount of loan disbursed during 16-17 is reaching at least 40,000 crores. Only slight matter of concern is a marginal increase in the non-performing assets. So, to emphasize the fact that despite the difficulties experienced in the general economic conditions in the country, the sector has been resilient. It has taken some setbacks and hits, but all the institutions have stood up to the test of the time, and they have resumed their normal operational activities. And I would say that this year, 2017-18, would be the year of stabilization for the entire microfinance sector. But one thing we always should not forget is that this is a sector which serves the poor and the underprivileged and the deprived sections of the society. So such a set of institutions is always prone to winds of instability from the socio-political and economic environment of the country. And the sector has faced such adverse winds in 2006, 2010, and again in end of 2016. So these are the things which the sector has to expect and take it in its stride, and it has done very remarkably over the last two and a half decades. So I think as a sector association, Sa-Dhan has no doubt that these institutions will continue to perform well in the coming financial year, and the gap which is left by bigger institutions graduating into small finance banks will be filled up by the medium level and smaller level institutions. So this may be difficult times, but the sector has shown that it can overcome these difficulties and progress forward. Thank you.
Well, thank you very much, Mr. Satish, for talking to all of us, sharing with us the details of the Bharat Microfinance Report. And now we move on to our keynote address, and it is by Shri Harsh Kumar Banwala, the chairman of NABARD. Ladies and gentlemen, we are very pleased to have him on our today's program. Okay, so there's a slight change, and Mr. Manoj Mittal, the DMD of SIDBI, will be giving his address first. And just to tell you a little about Mr. Mittal, ladies and gentlemen, he's a whole-time director with Small Industries Development Bank of India, and comes with over 25 years of experience in development banking, and being a very strong votary of Credit Plus approach for the development of the MSME sector. He had been instrumental in driving the adoption of many best practices. We welcome Mr. Mittal once again, and he will be talking to all of us. Now, please put your hands together and welcome him.
Respected Dr. Bhanwala, Mr. Satish, Ms. Vyas, ladies and gentlemen, so many known faces in this hall, and it's actually feel like homecoming. So actually, for us, for NABARD and SIDBI, there should not be any kind of introduction. It's something you always feel at such an ease. The feeling is truly homecoming. So, very good morning to you. And the topic today here is reinventing inclusive finance in digital era. So, I would try to focus on the topic rather talking about what SIDBI does, what SIDBI doesn't do. This is something I think we know each other so well, our activities, our programs, the contribution to the sector that has been pretty well known. So I won't be repeating those kind of things, whatever has been done in the sector. But at the same time, let me come to the topic. In fact, what I like three word here is inclusive finance, reinventing, digital era. So if I when I was coming over here, I was thinking, what should I talk about? What something as an institution SIDBI, what is that we can do in terms of thought leadership, in terms of action orientation. Last 2-3 years have been very eventful. You know it all. I shouldn't be, whether it's PMJDY or in the payment space, UPI, BHIM. You have now the new set of institutions coming, SFBs, payment banks, everything. You have even then a certain kind of a policy prescription. The demonetization happened, GST happened. So this is a kind of ecosystem getting developed around digital era. The government has been taking a lot of proactive steps. But in this digital era, we talked about ecosystem. A lot of people are getting induced towards cash payment, digital payments, keeping cash payments aside. Mode of transaction is increasingly becoming digital. Another feature which I find is the databases. The big databases are getting created. You have, of course, Aadhaar. That's something, it's a kind of a user database which is getting created. But at the same time, over the period, as the transactions will happen, a lot of transactional databases will get created. GST is, of course, one that kind of a database. Even the sales records, even in the villages, a lot of banks are adopting villages, and then merchants are transacting online. And then this database also would be getting created over a period of time. And then the next step, which would be, it's about the predictive analysis. How do we underwrite the loans? We have the models in the microfinance sector, JLGs, where in 15 days or 3 weeks, as we know, quote unquote here, that we try to educate the client, make him financially literate, and then provide him or her some kind of a capabilities to undertake an economic activity. So this is what typically had been a GLG model, but more and more now the digital data, big databases is getting created. Probably the predictive tools would be used for underwriting loans, even for small loans. But when I analyze the journey traveled so far, what I find is the focus has been mainly on micropayments, transactions, literacy. These are 3-4 areas wherein the digital databases, the digital route had been used. And when I see micro enterprises had not been in focus. Of all the efforts, whatever we had been doing, It's toward transactional things. It's not something about the strategic or the micro enterprises things. Surveys says India roughly have got 6 crore micro enterprises, and these are enterprises. Ms. Vyas also said in the beginning that the sector can contribute to the GDP, but these are the enterprises which create employment. It creates employment, and 6 crore enterprise in the unorganized sector, which is Mudra segment generally. That's where the employment potential is there, and that's where I feel inclusive finance should target at. While a lot of things have been happening around this average loan size of 22,000 rupees, emergency loans or an education loan, but if it's something, the picture has to emerge, it is something towards micro enterprises. Have been done something about this? A lot of fintechs are coming, action happening in that space, fintechs as a platform, P2P, or even as NBFCs, they are there, but the reach is limited so far. SIDBI has also tried to do something with the Stand-Up Mitra, Udyami Mitra portals, and still trying again with another thing in this space, in the digital space. We have created a public portal. But whether we have done enough, whether we have tried to be there, and when we find there, no, enough has not been done. And this is a space where we should be coming out with the things wherein we can keep the client in focus. Right now, whatever we are doing with the transactional things, the client is not coming into focus. And when I say client in focus, what I mean to say is empowering somebody to undertake an economic activity. Giving 15 days of training probably, or some digital literacy program, maybe just a beginning. But what about telling somebody how to start an enterprise, how to set up businesses, how to take loans, and maybe even for the smaller loans of 1 lakh of rupees. And that's where I think system as a whole, including as a DFI should be also, we have not done enough. So the hand-holding part of it, Cashpore has a model which talks about health and finance. They link both, and actually it started with something, livelihood, some kind of activity and finance. So that particular model, which probably they started with, can we scale that up? Can we bring these kind of people, instead of giving a 15-day GLG training, the group recognition test, some kind of support wherein they are trained enough? And that's where I seek your suggestions. We'll be coming out with a policy advocacy challenge in this regard. If some of you have certain suggestions on this, please come forward. We would be willing to take up certain kind of innovative projects in this area. We'll invite application Mr. Gaul, who is here in this hall. You can talk to him separately on this issue. Second part is the new innovations, what can happen in this field. It could be, we need to use digital mediums, even for imparting these kind of trainings. Physical trainings will not help. If you try to provide training to the people physically, I don't think we can increase our outreach in exponential manner. So digital means will have to be used, some kind of a digital entrepreneurship training models we will have to use, and I think the MFIs are best suited for that, the kind of investments they are making into the technologies. Second point, which I feel where the intervention could be made through the digital part, is the transaction, the costs to the borrower. And as I see, the cost to the borrower started coming down, but again it has gone up. I think with a major, now the share of the MFIs in this space is coming down. And there are other players which are coming, maybe in the SFBs, banks, everywhere. But the cost to the borrower is not coming down, and in some case it has gone to the maximum, the 26%. So is this possible using this digital medium when we underwrite loan digitally? Can the OPEX of the MFIs, can the OPEX of all those organizations which operate into this field be reduced, and benefit goes to the ultimate customer? We come much below 26%. And third thing, which I very fondly talk about, is responsible lending, responsible finance. What is that we can do right now, the responsible lending or responsible finance, it's something very, very reactive in nature. Something happens, we come to know subsequently, and then corrective actions are taken, reports are written. But let there be some kind of a real-time mechanism wherein we get feedbacks, we get analysis on the basis of which MFIs, the banks can decide which areas to lend into. 600 districts covered by the MFIs, but I think there would be top 20, 30 districts garnering more than 40, 50%. I'm not sure about this figure, but a major share of microfinance outstanding. So that's where we need to come out with certain strategies. Maybe I'll request here the credit information companies in this hall to have some kind of a subscription-based mechanism where we can find this data on a real-time basis. So finally, I would close this, my remarks on this three areas which I have mentioned, and I request for your proposals on the innovation part into the space of imparting or empowering the client. And in fact, we are going to start a fintech incubator at IIM Lucknow very soon. So most of the MFIs, I'm sure they will have certain kind of business problems in this space. They are welcome to share their problems, and we would be very happy to take up with the fintech incubator. Thanks a lot, and enjoy your 2 days. Thank you.
Thank you very much, Mr. Mittal, once again for talking to all of us. And now, ladies and gentlemen, I'm going to request Mr. Harsh Kumar Bhanwala, the chairman of NABARD, to give the keynote address. Ladies and gentlemen, it is under his guidance that the E-Shakti, the project for digitization of the world's largest microfinance program, SHGBLP, has been initiated in 25 districts across states, and the project is being expanded to 75 more districts during 2017-18. Digitization of SHG accounts has brought about transparency, enhanced bankers' comfort in credit appraisal, and facilitated provision of hassle-free credit and banking services to millions of poor households at their doorsteps. And as the accounts are being Aadhaar-linked, it will also help credit information companies like CIBIL in generating credit histories of SHG members. And it is also under Mr. Bhanwala's leadership that NABARD received the accreditation as a national implementing entity by the Adaptation Fund Board and Green Climate Fund of the United Nations Framework Convention on Climate Change. Let us all welcome him with a round of applause, and I'm now going to request Dr. Bhanwala to talk to all of us.
First of all, good morning to everyone. My colleague Mittal Saab from SIDBI, Satish ji has also been a colleague. He's there with Sa-Dhan, and Madam Vyas, who's been guiding Sa-Dhan for several years. And dear partners in the microfinance sector who are steering it through several years, and you have plans to steer it through for several more years. First of all, let me say, congratulate Sa-Dhan for an excellent report. This is not just a mere observation from my side. I went through it, and every year there is some innovation. This time they have included some more things which were earlier not there. As also the analysis for the MFI sector is more lucid and captures certain areas which are otherwise not covered. I think compliments to the Sa-Dhan team right in the beginning for doing this. Today's topic is inclusive finance and application of technology to the same. We all know in India, since historic times, we have had some form or the other of the inclusive finance, formal as well as informal. So I am today referring mostly to the formal sector's intervention, right from the governments, when Takavi loans were given to the farmers. We have seen a new emergence of microfinance sector which has happened today. This all, which includes small loans to various people, be it for consumption, production, SME small loans, very small loans, or let me say micro loans, even they are also inclusive finance. The farmers' loans are inclusive finance. So these are crop loans, etc. But we have come to categorize today specifically the new emergence of entities which lend specifically only small loans, and that's why today's focus is mostly on those loans, how to carry on those. Because if you look at today's reports, etc., they do not mention about the crop loans being given in the country. They're all inclusive, and they include the most excluded ones, let me say. And through the new mechanism of joint liability groups, we even include, I would say, the tenants, the agricultural laborers, etc., who are otherwise excluded with mechanisms of those kind. So, to some of these sectors which are being done exclusively by banks, there is a technology outreach by banks. And for others, through MFI and through SHG bank linkage program, which is today defined as the microfinance sector, and we all understand that as microfinance sector, the digital initiatives are by and large coming from these entities. Madam Vyas before me was mentioning that we have seen increase of entities in the microfinance sector. That's true, and the diversity of the purpose of each of these entities, because sector is proliferating and the niche requirements are coming, and we didn't have the credit ratings agencies some years ago. We started with very small NGOs or informal entities offering small helps. Now they have grown into MFI, big MFIs, as also small finance banks. They have come out, payment banks have come up. Now all of them are fulfilling some or the other kind of requirements. So basically, before we look at technology application, we should be knowing what are the services which really cater to the microfinance activity which we today comprehend. Broadly, one could say that we started with savings in most of the things, although in some of the MFIs, savings do not come first. So savings, because banks have been offering, banks have been involved. I think most of the entities leave out very few small NGO institutions. They are all, savings is by and large on a digital platform. Except that the only entity which was left out was SHG bank linkage program, which we are again trying to digitize now, and I'll come back to that towards the end of my interaction with you. We offer credit through the microfinance entities, and I think there is a fair amount of, I will not say very large, but fair amount of technology application on credit delivery. The kind of diverse requirements and different modes of giving the credit, etc., as also because of certain handicaps of the sector in terms of putting upfront some investment capital for applying technology. We see in credit application, technology application is not as vast as it should have been. Payments is one space which has been flooded with the technology applications. Be it banks, be it the MFIs, be it the small finance bank, be it the payment banks, the technology graduation, let me also say even Aadhaar entity, which is offering the Aadhaar. They themselves have come out with an app which offers, you don't have to really, independently through your biometrics, you can make the payments. There was a reference to that by Mithil Sir. So in payment space, technology has played a significant role. But I would feel that insurance outreach is very much required, because insurance outreach is one sector which mitigates the risk. The moment risk confronts a small borrower or a small recently included person, so if there is no health insurance, there is no I would say, enterprise protection insurance, be it in the form of his own life insurance, or be it in the form of crop insurance, or be it in form of some other micro enterprise insurance or the livelihood livestock insurance. Unless that happens, there is always a residual, there is a threat of his falling back to what he was and being excluded to a great extent, and also harming the existing entities which are otherwise involved aggressively into microfinance entities. So I feel in outreach is also limited in most of the risk mitigation mechanisms. There is lots of scope. Also, technology application for outreach, we still have to, the small person has to fill a lot of forms, which somebody looks at it, conceives of a good technology for reaching out for micro insurance to the existing borrowers would be a great benefit to the sector. Then pension is another area. How long we all are from the organized sector, and all of us, some form or the other pension we have. I feel pension outreach to, availability of pension facility to the recently included people who are through the microfinance sector is still limited. That's number one. And so there are opportunities for pension products to come up. As also, application of technology in the pension sphere is almost not there in terms of the client outreach. Maybe that the organizations offering pensions are digital, but in terms of client interface, that kind of change has not been seen in the recent years. Now, once we apply technology, number of issues come up. Now, technology is applied for what purpose? First of all, for a very quick reach out to the farmer, a regular reach out, 24 as far as possible, a constant reach out. Third is, the reach should be made little cost effective, because I was seeing the booklet, whatever rate at which you are offering, overall for the sector, nearly 48 to 49% is the financing cost, and you have nearly 24% is the outreach cost. There are three broad costs indicated in the pie chart there. One is 28 and one is 24. Now, if we have to work on a faster outreach, on regular outreach, then the cost of such a system has to be low. So this includes not only the operational cost, this has to be understood in terms of two things. From the perspective of the person offering technology, and from the perspective of the person who is receiving technology benefits. I think it has to be cost effective from both the perspective of both of these. I think in some measures, at least outreach transaction cost has been reduced to the MFI sector, but there are studies which also indicate that for the financially literate ones, the cost of reaching out through technology is small, is reducing. I move into a flight, I transfer something to my daughter while on the move, much less cost. Whereas for a microfinance entity, is this cost come down? We need to really see this. Availability of electricity, how many tries he has to make, whether the internet is there or not, he is asked to come back again, and there are a number of things which build the ecosystem. So what I'm trying to say is, for technology application, you require an ecosystem embedment. The person who is offering technology should be having money to offer technology. Then there should be infrastructure for digital technology, which means bandwidth availability, and also availability of electricity in some of the rural areas. And above all, you also require a digital financial literacy drive. As of now, most of our efforts are on financial literacy, when the country, and especially microfinance sector, we are struggling with opening of accounts. And there are 4 or 5 things which I have enumerated which make the microfinance sector. I think we have to work aggressively on technology literacy across all these areas which I have enumerated. And we have worked from NABARD side, I'll come later, we have taken some measures. So prerequisites for technology application are digital financial literacy, availability of digital infrastructure, availability of even physical infrastructure. To offer those services, offer servicing of the technology itself, you require roads, you require even, let me say, irrigation and drinking water facilities. And unless those are existing, it becomes difficult for you to offer those services. So technology rides on many other things, so which also need to be simultaneously be taken care of. Once technology comes to somebody, the second immediate threat is, I have heard the chairman of some of the bank who come and tell me that I went to my branch, I wanted to get certain things done up technologically, it was not happening. The servicing, the after-sales service, let me call it, which is crude term in financial world, but after-sales service through technologies is not to the expectation of the customer. He says, it took me for a change in some of the things which he was trying to say. The person who was offering, having the password was not there. When he was there, the system was down. Third time when he went there was a strike to offer this. He says, finally I was able to get it done in 12 days. That is the chairman of a public sector bank, retired chairman. He said that from my own branch, not any other branch. See the ecosystem, how it works. So we are pushing people to technology. Are we ensuring servicing after technology? No, you have to really provide those kinds of things. So which I'm leading to is grievance redressal mechanism has to be very robust. And I feel technology makes it impersonal. By and large, most of us in our society are geared to grievance redressal on a personal basis even now. No, I don't feel satisfied even today. Somebody by saying that it will be a complaint is given to let's say XYZ company or institution, and still we keep following it up on a regular basis. That mechanism of service redressal, grievance redressal within a time-bound period is not there. So that is a big handicap. I think we have to look for that. Another area which is happening more often in payment space is the obsolescence. The technology gets outdated very quickly. And one gets familiar with one technology, and in the meanwhile there is a new technology being offered. So this bombardment of technology to the person being included is also somewhere, I would say, the person who is to be included on technological grounds, he develops some kind of a reservation about technology. Today I learned this. I somehow started opening my account digitally through the computer. Tomorrow you are saying it will be through mobile. Though ease of access, but ease difficulty of learning. Both are inversely related. You are moving towards ease of business, but difficulty of learning every time. So this needs somewhere to be tackled so that the newer technologies should operate from the same platforms as far as possible, so that lack of familiarity, and half of the complaints arise from that as well. Investment is a major, when you're talking of obsolescence, I think the major factor is going to be for microfinance sector. Big entities can always have reserve fund or something to make investments. If a NGO or a small MFI has to move to a technological platform, I think you require some kind of a fund for making sure that technological investments are regularly made. This can come from within the institution, and this can come from outside the institution as well. So if there is, industry should think of finding some solution to this a perennial problem which I see in the years to come. Regular investments for technological applications. Three more things are important. We are talking of technology application for the inclusive finance. It is not normal finance. And we all know that three basic pillars are there for inclusion. if you have to view sustainable financial inclusion. One is the finance aspect of it, finance capital. Second is the social capital, which we have to do. You have to get familiar, you have to educate client, you have to work in groups, you have to have their own change makers, animators in the rural areas. And also social capital, to ward against, I was surprised to see some of the feedback in this era of loan waiver. I'm here to share one particular incident. In one area, one of the few of the MFIs reported to us that there is a gentleman, I will not name him, he says, I'll get loan waived for everybody, including the microfinance sector. You just become a member with 200 rupees fee. You require a very strong bonding and strong education and a social capital to overcome such kind of threats which come very frequently to this sector. And it has happened in past as well. So, application of technology for social capital formation or application of social capital fundas, which we call it, is also another area in which it's just messaging as of now. How do we conduct our meetings? Does it require more technology application to conduct it in a more efficient manner? So that's one area which needs to be looked at, and lots of other things also. How do we interact with other societal groups? Social capital doesn't come from within the group, they come from outside as well. So that's one area which requires lots of probing. I feel one of the elements of the social capital formation is the group is a very efficient mechanism to come together wherein one learns from each other. And this group formation, which I call as collectivization, is also a solution to many of the otherwise economic problems being faced in the times to come. You will see that. Collectivization is an answer to the regularly declining land holdings. The produce available from a farm is too small to be marketed. And this is relevance to financials as well. So I don't drive as much of money from my produce. I don't get that much as I can otherwise if I combine together with somebody else. So we have started some initiatives for collectivization from NABARD. We have been doing it, but that was all on manual platform. From NABARD side, we are trying to apply technology to almost all of them. So we have a platform for farmers, producers, organizations recently made applicable. And it is not just from the perspective of a regulator or a facilitator or somebody for the company, because most of them are companies. So it need not be just giving a support to the regulator, which is the Corporate Affairs Ministry, but it is for their own good also. Some of the platforms that we are making, that member-driven aspects have been kept in mind. We have also gone ahead and collectivized which were already existing group was a self-help group. So we are trying to digitize that as well. I think, let me share with you, we are very enthused. And so are the bankers, the initial experiment. More than 1 lakh groups are on the digital platform. My colleague is going to share subsequently details about it. But broadly, let me say that the bank linkage in these districts which have been covered, 2 comprehensively, 23 more, so 25, the bank linkage was somewhere around 38% for these districts. We have seen within 9 months jumping it to 54% in these districts. The comfort level of the branch manager is much better. Comfort level of the group is also much better. You see, we are capturing the Aadhaar number as well as the mobile number of the group. Earlier group transactions, when one was outside, one was not attending a meeting, the information was not going to them. What happened to my account of the group. And many of them go on seasonal labor kind of things. They go for 10 days, work somewhere, 15 days, work somewhere, and meetings will go on. They will have no idea. I think the messages have started going on their mobile phones. And the one measure of success which is emerged from this is earlier many women were not giving their mobile numbers. Now they are coming forward and saying, why my mobile is not captured in this. So I think this is an element of a success story. So comfort of the branch manager is better because groups are rated and information is made available on his desk. He doesn't have to move out. And also the members are better. And I feel not only linkage, this will drive multiples of linkage as well in the years to come. I personally feel if this is applied across the country, almost all districts which are being covered by SHG Bank Linkage Program, the business of banks, yearly business will go up by around 15 to 20,000 crores when all the districts are covered. This is the rough estimate, initial estimate done by us. I think technology would drive further opportunities. Further opportunities would come up, and in the end I would say that financial inclusion ultimately is providing opportunities to people. It is not saving linking them. It is not bank linking them. It is also not mitigating their risk, etc. Making him enable so that he decides for himself. Decides for himself with all view of the financial architecture available. All economic opportunities available. And if he is able to tap the opportunity on his own, I think he will be a successful, included person, and that is the ultimate goal for all of us. I again thank Sa-Dhan for giving this opportunity to me, and also thank you for hearing patiently. Thank you.
Well, thank you very much, Mr. Bhanwala, for that comprehensive keynote. And we thank you once again for coming here and talking to all of us. With that, ladies and gentlemen, we come almost to an end of this inaugural session. And before we launch the HSBC project with Sa-Dhan, which is the next thing we are going to do, I'm going to request Ms. Jayashree Vyas, the Managing Director of Seva Bank and the Chair of Sa-Dhan, to kindly thank each one of our speakers here by presenting them mementos as a token of gratitude and appreciation from our end. Requesting Ms. Vyas to kindly present a memento first to Mr. Harsh Kumar Bhanwala and thank him for being here and talking to us. Our representative is just going to get the memento on the stage, and requesting Ms. Vyas to present it first to Mr. Bhanwala and thank him. To Mr. Manoj Mittal, and to Mr.